Well, I mean, we took a listen to what was happening here, and Einhorn is making the case. First of all, we already know what he wants. He wants basically Apple to pay a preferred stock dividend. He's going about it, though, through a different manner. He's fighting something that Apple calls their proposal number 2. With Apple's proposal number 2, they're seeking to do 3 different things. Apple is trying to get a vote on whether or not, number 1, they're going to require a majority vote for all directors in the corporation. Number 2, they're going to establish a par value, a base value for the level of Apple stock. And number 3, whether or not you need a shareholder vote, shareholder approval to issue any kind of preferred stock dividend. That's the important part. That's what Einhorn is trying to lobby against. He claims Apple has bundled these 3 things into one proposal for one vote unfairly, that they should vote on these things separately. Now, during the call, he raised a number of interesting headlines. He basically said that Apple trades at an exceedingly low price-to-earnings ratio. He says that they have an exceedingly low PE ratio, also that they have a cash war vault.
By the way, 8.5 times earnings, you take out the cash, and it's a 6 handle. It's
correct.
Cheap.
And that's the reason why. He says that Apple's stock buyback could produce a 17% boost in stock, but if you issued preferred stock, you would attract new investors to Apple. You would also have a situation where that preferred stock can actually attract those investors and have a market for these securities in the future. He's proposing that for every 1 share of Apple common stock that's out there, that they issue 5 of these preferred shares on top of that. Each of those preferred shares, in his assumptions or calculations, he says would pay 50 cents per share every quarter for about $10 per share in terms of the overall payment. So that's the big deal here.
John, you know this company as well as anyone. What's your take on where Apple stands?
Well, Dom Chu is a really smart guy, but what he just said is kind of complicated to me. And I think from Apple, where Apple sits, think of the Apple products. They are, for the average user, simple experience. When it comes to Apple's investor relations policy, they tend to go in that same direction. And I say that because Apple's been very clear that they're going to do something with some of the cash, and that last year they already put some of that cash to work. The obvious things before David Einhorn started speaking out were stock buybacks and dividends. It feels like that's their thinking as opposed to a preferred stock, which, by the way, we have to ask the question, too, whether all existing Apple investors want that. The other very quick thing I wanted to mention, Dom said off the top, the proposal at the shareholder annual meeting. Keep in mind that the reason that Apple tabled it that way in the first place was because they were looking actually for some ways to be a little more shareholder friendly. And when Tim Cook got up on stage last week and said, I don't get it, I'm not sure why we're being attacked in this way. I think if there was some nefarious reason why they were doing it this way, it'd be one thing. But that's Apple's position.
So
no,
what,
we're actually trying to,
what does the company actually gain, Dom, by doing these iPress shares? I mean, why not just do exactly what John outlined? You can issue dividends, you can have a buyback, you can maybe do a little M&A. I mean, there's other things to do with the money.
To John's point.
But that's the interesting part about this. This is, we make these comments about JP Morgan and their trading loss, about it being a tempest in a teapot. This is really a tempest in a teapot for a lot of investors. It was brought up during the Q&A session. Ultimately, this doesn't really matter because they want shareholder-friendly activities. They want majority votes for their board of directors. They want the ability to tell people, hey, if you want, as a common shareholder, an owner of this company, for us to pay a preferred share, we will, but we will put it to a vote for you guys. A lot of shareholder rights activists like this proposal that Apple is putting forward because it allows them more of a say in Apple's future, especially when it comes to giving cash back to shareholders.
And what's curious, you also create an asset class which is higher in the capital structure, which may appeal to people.
Almost like bonds.
Yeah, and they don't have a lot of bonds at Apple.